Are you a potential home buyer sitting on the sidelines wondering if right now is the best time to buy a home? Despite the fact that home prices have reached all-time highs, we've got additional housing inventory coming to the market, and real estate in general is starting to slow down. And you're thinking, is it better to just bite the bullet and buy now, or should I rent for another year? Hey, I'm Wofford, real estate broker with Berkshire Hathaway in Raleigh, North Carolina. And in today's video, we're going to talk about the idea of buying versus renting and the things you have to consider as a first-time home buyer to make this an apples-to-apples comparison. Like, what are the pros and cons of buying a home? What do you need to know? Why is homeownership so important? And when are you better off renting than buying? And that's what we're going to cover in detail in today's video, so you can make the best decision. And if you get any value from the video, smash that like button. And if you have any questions or something to add that might help someone else that's watching, please leave a comment below. Now, if you're out there in the market at the moment, whether you're on the buy side or the rent side, you know things have been absolutely crazy with respect to high buyer demand and a low supply, not only of homes to purchase, but rental homes as well, which has driven the price of both up considerably. So making the decision to buy versus rent is more difficult now than ever, especially as we head into an inflationary environment, because in an inflationary environment, rents tend to keep going up. So why is homeownership so important? Well, first and foremost, it offers you a fixed cost in an inflationary environment. So buying a home with a 30-year fixed mortgage, for example, allows you to fix that payment regardless of what happens to rents, home prices, or the economy. Your monthly payment or the principal and interest payment won't change. And every single month that you make a payment, you're actually paying down the principal on that loan. So over time, the value of your property should increase, and the difference between the market value of the home and the balance of the loan is referred to as the amount of equity that you have in the home. Now, I'm sure there are a lot of you out there saying, well, the market sure has run up a considerable amount, so it's due to fall back. And to that, I'd say that's true. And some areas of the market will pull back more than others, but some areas might actually go up. But that really all depends on your local market and the unique characteristics of the property. But for real estate as a whole, on average, we've seen home prices increase about 4.5% per year over the last 50 to 60 years. So on average, home prices tend to go up. So even with these pullbacks in the market, we've seen on average that real estate prices have increased on average 4.5% per year. So you have that idea of a fixed cost. You have the idea of the home for savings. And by paying down the principal each month, you might say that's akin to putting money into a savings account where you're getting appreciation on that money in addition to being able to potentially create generational wealth. So this is one of the primary reasons homeownership is considered a cornerstone for building personal wealth. So is now a great time to be a homeowner or a home buyer? That's something I want to talk about here in just a sec. But first, and most importantly, ask yourself, how long do you intend to be in the house? You need to be thinking, I'm going to be in this home 7 to 10 years or more to realize the benefits of buying. And you need to buy something that fits your needs of where you plan to be 5 to 7 years from now. Which means if you're single and you're planning on getting married and you're planning on having kids, you need to be thinking about that as you're buying a property, and not just buying a property to get something at the moment. Don't think about it like you're going to just sell the home and buy something more appropriate in the next 2 to 3 years and upgrade your standard of living as you go. Now, I'm not saying that can't happen, because it definitely can, but I just wouldn't bet on it. And I would seriously encourage you to look at the longer term horizon. And I would also recommend that you have set aside in the bank, in addition to emergency funds or accounts that you have easy access to, additional funds for, say, home repairs, insurance deductibles, or unforeseen costs. Not to mention, if something were to happen with your job, you don't want to be stretched too thin. You can't really afford to be house poor. You need to be able to comfortably make your mortgage payment every single month. So if you're someone that knows they're in a temporary position and you're planning on moving in a couple years, you should probably rent a house, and you probably shouldn't consider buying a home right now. But realize every single month when you pay your rent, you're actually paying your landlord's mortgage. And that's something you just need to consider. But honestly, sometimes it makes more sense to rent than it does to buy. And I'm going to give you a good example here in just a second, where I'll show you what the current rent is and what that looks like that you're paying out every single month versus what it would look like to own that property. Now, a lot of people are looking at the market right now and they don't understand why there's such a low supply of rental homes and houses for sale, and why there seems to be so much demand out there in the market for rentals. And there's really a lot going on. Millennials are reaching their prime buying age, and they're really a big component of why home prices have gone up. Because according to the National Association of Realtors, millennials now comprise 43% of the market, and millennials range in age from 23 to 41 years old, and some of the younger ones are just now entering the market as first-time home buyers, and this group wants to own property, and therefore they're buying up a lot of these entry-level homes. And on the rent side, it's a similar story. You have a lot of millennials out there that are done with college and they're moving out of their parents' homes and they're looking for their own home. And you've also got sellers that think the market's peaked and they're selling their homes and they're sitting on the sidelines waiting for a pullback. And you have to realize these sellers will need to find a temporary place to rent, and therefore they're taking up some of the rental. In addition to the groups I've mentioned, you also have lifelong tenants, people that have been renting a property for a long period of time. And now the sellers have come in and they've said, hey, we're looking to put this property on the market. We're going to sell this home. And so those tenants are now displaced, and they've also joined the rental market, and they need to find a place to rent as well. In addition to the migration patterns that we've seen over the last couple of years, you have quite a few people that are moving to cities, and instead of buying, they're renting just to figure out if they like the area. And you've also got people that have moved out of the big cities and they want to be in the suburbs, and those people are also choosing to rent. And maybe that's because of where house prices are, or maybe they think there's a housing market crash coming, or for whatever other reason, I don't know. But a lot of people are choosing to rent, and that's just a thing that's popular right now, and it's taking a lot of rentals off the market. Now let's take a look at a home that's currently for rent, and I'll tell you how much it would likely cost to buy it, and we'll compare the two. I'll give you a realistic buy versus rent scenario. So we've got a house in my neighborhood, $3,995 is the rent. It's 2,305 square feet, 3-bedroom, 3-bath. And just looking at the pictures, pretty nice house. Looks like it's been remodeled. Okay, we'll compare that to this house that's also in North Hills. They're very similar. The other one rented for $3,900 a month. This one just sold for $830,000. So I think they're very similar. So with a current interest payment of 5.27% for 30 years, your monthly payment would be $3,675, and you'd be borrowing $664,000, assuming you put 20% down. So a little bit less than the rental payment. And in 2022, you're going to have a remaining balance of $660,000. In 2023, you're going to have a remaining balance of $650,000, roughly $10,000 less. At 2032, $537,979 would be your balance. You would have $126,000 more in equity after 10 years. Okay, so I hope you're able to follow that example where after 10 years, you'd have $127,000 more in equity in the home if you bought the home at a 5.27% interest rate and you made the payments for 10 years. I also want to show you if you have appreciation on the home, that's a bonus. That's where the savings and the ownership really pays off in the home. So let's take a look at this example. You started with $830,000, that was your investment. After 10 years, with an annual appreciation rate of 4.5%, and that'd be compounded annually, the home would be worth $1,288,964. Minus the original $830,000 that you paid for it would be almost a $459,000 increase in equity just off the appreciation. Now, let's say, for instance, the home only appreciated at 2% a year. Well, that'd be $181,765 gain in equity after 10 years at 2%. So we never know what the appreciation rate is going to be. I mean, historically, it's been 4.5%, but then again, we had a huge market run up. So is it going to stay that way, or is that inflated? But I do think a realistic rate of increase is 2%. So if you're somewhere between 2% and 5%, I think that's that's very realistic to look out over the longer term, say 10 years or longer. Again, just for a full disclaimer, property values don't always go up. I mean, you got bad location, you got bad property characteristics to watch out for, and granted, home prices aren't always going to appreciate. But one thing that I want to make sure that you understand, the difference between renting and owning is when you own, you've got a fixed principal and interest payment, and that's not going to change. And that's the one thing I really want to stress about home ownership and why it's so important. And that's really why it's a cornerstone for creating and maintaining wealth. And it's typically going to be the largest asset that many people will retire with and potentially pass on to the next generation. And that's what makes home ownership so important. And you need to be buying for the right reasons. You shouldn't just go out and buy a house unless you meet the criteria that we really talked about earlier. So if you're considering buying versus renting, just make sure you carefully think about and take all these things that I mentioned into careful consideration. And just realize that in my prior example, if you'd only put 3% down versus that 20%, that would have made a huge difference. I mean, it really changed everything. So in that case, renting might have been your best option. But I encourage you to always go to the internet, get some amortization tables, plug some numbers in, see what's realistic for you, and make sure that it's really going to be to your advantage and it's going to be a payment that you can definitely afford. And run some of these scenarios and just see how it makes sense. And there is one more big advantage to owning versus renting that I should have mentioned, and that's you have a pretty big tax advantage where you get to write off all the interest, and you can do that on your tax return by itemizing your tax return. You know, I'm not a tax attorney or I'm not a CPA or anything like that, but you'll need to consult with your tax professional about that. But you can definitely write off the interest, and that should be used to offset your preventative maintenance repairs, you know, replacing the AC, replacing the roof, fixing the siding, all those things. That's really what that tax credit is for. I hope you enjoyed the video. If you liked it, make sure you give it a big thumbs up. If you haven't subscribed, subscribe to the channel so you can learn more about life in Raleigh and where to live, and I'll see you on the next video.